Welcome back friends to the class number 94. In the previous video we had discussed about the letter of credit basic concept, and now we try to merge that concept into post-shipment finance facility through this video. So post-shipment finance facility is basically the financing of your debtors only. The money that you have invested in your debtors, post-shipment finance facility provide financing to you for that investment. So what are the terms used for post-shipment finance facility? The one term used is PSCFC. That means post shipment credit in foreign currency. So in your bank, you may hear this term as well, PSSCFC, right? So some other banks use these terms, that is FBD, FBN, or FBP, or interchangeably they use EBD, EBN, or EBP. There is one slight difference between FBD and EBD facilities with respect to the approved lines of the banks with the foreign bankers. So, which is not of major concern for us. We just want to understand the concept only here. So, foreign bill discounting, FBD means foreign bill discounting, EBD means export bill discounting, foreign bill negotiation, export bill negotiation, foreign bill purchase, and export bill purchase. So FBP or EBP facility is not used practically, right? So this is practically the financing of your transit period only. It is for DP basis system where your payment terms are DP only, document against payments. So one of you must say, sir, you have told in previous videos that in DP basis post shipment finance is not possible. So then now you are saying that FBP facility is for the DP basis terms only. So that is why I'm also saying that this facility is not practically used by the bankers. So only though these two facilities are, termed as post-shipment finance. PSC is basically a broader name of this facility which covers all these three facilities only. So let us first understand about the FBD and EBD facility. That is foreign bill discounting and export bill discounting. So that is India, C, and America. Rahul, his banker, HDFC Bank. David, right, his banker, Bank of America. Now, David has submitted the order to Rahul. Rahul has manufactured the goods as per the orders of David. Now, Rahul ships the goods. Rahul sends the goods to the Indian port for shipment here, right? And hand over the export documents to his banker, HDFC Bank, right? Now, what will HDFC Bank do? HDFC Bank will send these documents to Bank of America, the banker of Mr. David, right? Now, what will Bank of America do? Now, Bank of America will call up David and ask for his confirmation and take acceptance from David and hand over the docs to him. The payment terms are obviously document against acceptance, DA basis only. So, there is credit period involved. The payment terms are 90 days from the date of acceptance. From the date when Mr. David signs the bill of exchange or accepts the bill of exchange, the 90-day period will start from there. So Mr. David gives the acceptance to Bank of America that I am authorized to receive these goods, and I am committing that I will make the payment, due payment in 90 days. So after taking the confirmation from Mr. David, Bank of America will confirm the same to HDFC Bank. Bank of America will tell HDFC Bank that David has accepted the terms and conditions of bill of exchange and he has committed to pay the due amount in 90 days only, right? So now HDFC Bank is confirmed about the export being taken place. HDFC Bank has received the export documents and he has received the confirmation of Mr. David as well, who is the receiving party. So now HDFC Bank is sure about the genuineness of this transaction, and HDFC Bank is sure that export have actually taken place, and the other side of the country, the other second party has also committed to it and has also is also ready to accept the goods. So thus basis confidence on Rahul's past. So HDFC Bank have got the confirmation of the export being taken place, but the main party for HDFC Bank, the main borrower for HDFC Bank is Rahul only. HDFC Bank will not provide any financing facility to Mr. Rahul unless and until HDFC Bank is sure that Rahul is a genuine person, Rahul is doing a good business, his financial numbers are good, his balance sheets are good, his business premises are good, and Rahul has provided adequate security, collateral security to HDFC Bank as well. So after satisfying himself itself by all of these pointers, only then HDFC Bank will be ready to finance Rahul for this 90 days period, right? So, thus, basis confidence on Rahul's past, present, and future, HDFC Bank credits the bill amount to the Rahul's account. Now, the due date of the bill is 90 days from the date of acceptance. The actual payment will come after 90 days. But since HDFC Bank is confident on Rahul and HDFC Bank has checked that this transaction has taken place and it is accepted by David, so HDFC Bank basis that confidence will give that amount to Rahul now only. He will credit the amount to the Rahul's account, right? And on after 90 days, when David makes the payment, then that payment will be used to knock off the amount lent by HDFC Bank, right? So HDFC Bank credits the bill amount to Rahul account. Thus, Rahul gets the funds early, which were to be received after 90 days, right? Now, after 90 days, the payment received from the David shall be adjusted in the loan account, right? So, this is practically post-shipment facility, post-shipment finance facility in form of foreign bill discounting or export bill discounting, we say, is given by the HDFC Bank. So, exports bill which have been accepted by Mr. David are discounted by HDFC Bank here through this post-shipment finance facility. So, this is the first type, FBD and EBD. Now the second type, that is FBN or EBN, foreign bill negotiation or export bill negotiation, and it is linked to the previous video in which we discussed the basic concept of letter of credit. So again, India, C and America. Now carefully assess how the transactions are moving here. Now David here wants to procure goods from Rahul. David requests Bank of America for letter of credit for 90 days period from the date of shipment, right? David goes to Bank of America and tells them that he needs LC for issuance to Mr. Rahul, since Rahul doesn't trust David and David also doesn't trust Rahul very much. So Bank of America asks, what are the payment terms? So David says the payment terms are 90 days from the date of shipment of goods by Mr. Rahul, right? So Bank of America assesses David past, present, and future, and basis that past, present, and future, and basis the collateral security offered by Mr. David, Bank of America issues LC, the guarantee on behalf of David. Now that LC is given to Rahul, right? On basis that LC, Rahul manufactures the goods and ships the goods as per the LC terms. Whatever terms are mentioned in the LC, Rahul has to comply with all these terms and ships the goods as per the LC terms, right? Now Rahul handovers all the export documents to HDFC Bank along with the letter of credit copy also. The letter of credit which is received by Rahul is handed over to HDFC Bank also along with all other exported documents. Now what will HDFC Bank do? Now HDFC Bank will send all of these documents to Bank of America. HDFC Bank will send all these documents to Bank of America. Now, Bank of America will check all the documents and will see whether all these documents, whether all the terms of LC are complied or not, right? After Bank of America is satisfied that all the terms of LCs are now complied, the Bank of America will provide its confirmation to HDFC Bank. Bank of America will provide confirmation to HDFC Bank. We call it LC is being confirmed. LC has been confirmed by Bank of America. So which would mean that Bank of America is now bound to pay the due amount of LC, right? So Bank of America will confirm the LC, will give confirmation on LC to HDFC Bank, right? Now what will happen? HDFC Bank is now sure that even payment is now bound to come here. In the first scenario, there was a little bit of risk. HDFC Bank had to take a collateral security from Rahul because it may happen that David may, if it is a probability, there is a probability that David will not make payment on due date, right? So, but in this scenario, there is zero risk involved because the Bank of America is involved here and it has issued LC. Now, even if David doesn't pay after 90 days, Bank of America has to make the payment of this transaction. out of its own pocket, right? So the payment is 100% sure here, right? So even payment is bound to come as LC is confirmed LC only. So they transfer the payment to Rahul account. So what will happen? HDFC Bank, post getting confirmation from Bank of America, will credit the amount to Rahul's account, and on due date, which means after 90 days from the date of shipment, will recover back the amount from Bank of America. So that by doing this, the dues of HDFC Bank will get settled, right? And on due date, the payment from the Bank of America is adjusted towards the dues, right? So this is the LC operation which are merged in post-shipment finance facility. We also call it post-shipment finance. But friends, one thing that you need to understand particularly here, since HDFC Bank is sure that payment will come from Bank of America, HDFC Bank will not take any collateral security from Rahul here. There is no need for any land and building as a security or any FD as a security to HDFC Bank, since LC is confirmed LC. LC is confirmed LC and it is guaranteed by a other banker. So in this, if you are taking facility of FBN or EBN from the bankers, basis confirmed LC, I am repeating, confirmed LC, then there is no need to give any collateral security to the bankers, because LC is in itself represents a security only. It is a security only, right? So no other additional collateral is required by HDFC Bank in this scenario. But what if the LC is an unconfirmed LC? Sometimes a borrower requests the bank to discount the LC without having acceptance of Bank of America, right? So if Bank of America is not providing confirmation on the LC and Rahul is requesting HDFC Bank to discount that LC to make the payment to him, then there is a risk involved that in future Bank of America may not accept the LC or may raise some kind of objections in the LC. So the payments will get unsecured. There will be high risk of default, right? So in that scenario, if Rahul requests HDFC Bank to discount the unconfirmed LC, then in that scenario, HDFC Bank will ask Rahul to submit any collateral security as well, right? So in that scenario, the case will be more or less similar to this case in terms of risk appetite, right? So this was the concept of post-shipment finance divided into bill discounting and bill negotiation. And in the next video, we will discuss some key features of post-shipment finance. Thank you very much for watching this channel.